We'll take a break, I believe. Okay, I guess we're not taking a break. We'll just introduce our panel of guests. Ruchit Jain, Ashish Chatramurthy and Mohit Gaba now are joining in to talk about trade this morning on the Lal Street. It's been a busy morning, gentlemen. Sorry for keeping you waiting. Mohit, I'll come to you first. You're caught on the Nifty. Global markets are looking euphoric. SGX and pre-open is indicating to start closer to levels of 8,800. Could we break consolidation and head up today?
Possibly. Yesterday we held out and traded for the last 4 sessions. We've been in this tightly bound range of between 8,700 on the downside and 88.20 to 88.30 on the upside. If we do get some kind of breakout on the upside in the morning and continuously follow through, maybe even levels of 9,000 are possible on the Nifty. But I reckon that I think we will be range bound for the coming few sessions and build a base around these levels and then move higher.
Right, that's the view coming from Mohit. Ashish, what about you? Would you consider going long an opening trade for a positional day call?
Good morning. So yes, our view is quite positive on the markets because we have been consolidating for a while around these levels, and it's a positive consolidation which has happened because post a breakout above 8750 we required some amount of consolidation which has already happened, and post this monetary policy also we saw some profit booking and again saw a sharp recovery from lower levels, clearly indicating that a lot of long accumulation has happened on dips around 8750 zone. So keeping that in mind, I think 8750 should be kept as a trading stop loss in Nifty futures, and one should initiate a long position. On upside, we expect levels of 8950 to be tested in next 3 to 4 trading sessions.
Right. And what about you, Ruchit? What is your trade this morning?
Yeah, hi, good morning. Similar to other panelists, we have seen this. This is clearly an uptrend wherein we have seen formation of higher top, higher bottom on Nifty as well as Bank Nifty. The last 4 trading sessions, the consolidation which has happened is just a corrective move within an uptrend, and there are actually 2 types of correction. One is price correction, and one is time correction. It's good that we have seen a time-wise correction, and I think in today's trading session, if we move above 8820 and if we sustain there for first half an hour, then probably we would head higher towards 8900 in 8900 today itself. So one should definitely see how first half an hour pans out. In case the market sustain above 8820, then one can go long for targets of 8900 for intraday.
Ruchit, what's the call on Bank Nifty? We've seen quite a bit of resilience on Bank Nifty in the recent past, at least. It's not really given up too much, if I can say that. At these current levels, could one even consider going long on Bank Nifty? Probably for levels of 21,000 if nothing else.
Yes, the Bank Nifty index also has been an outperformer in the recent past. We have seen the entire up move which was there in the Nifty has been led by Bank Nifty index too. Now, if we go to the private sector banks, which constitutes majority of the Bank Nifty components, I think about 75 to 70 to 75% constituents comes from private sector banking space itself. So many of the private sector banks are still looking positive. Axis Bank has seen a consolidation phase in last 2-3 months in which it has formed an inverted head and shoulders pattern. ICICI Bank has first has given indications of resumption of the higher top higher bottom formation. Even Kotak Bank is in an uptrend. We have seen recently we have seen a breakout from a consolidation phase. So when the private sector banks itself are looking bullish, at least from short to medium term perspective, then definitely Bank Nifty would also lead high, would also continue to lead higher. So last 4 trading sessions, a corrective move. I think this should be used as a buying opportunity in Bank Nifty too, where the index has a very strong support in this range of 19,800 to 20,000, and in this range one can look to create long positions. And on the higher side, we are expecting levels of 20,575 probably in next 1 or 2 weeks.
What about you, Ashish? Top banking picks? Would you even go after banking firstly? And secondly, if yes, what in the banking space would you go after? Private sector, public sector, and your top picks actually?
Yeah, so in terms of performance, we believe that, now PSU banks might do quite well because, if you look at the data, clearly we have witnessed a strong buildup of, open interest in most of the mid-cap as well as the large-cap PSU banking names. And obviously, if you look at in terms of, technical pattern, most most of these stocks are trading at a 52-week high or either have crossed the last year's high, clearly indicating that a lot of strength is being seen in the current up move. And we believe that, you know, from current levels, a lot of PSU banks might see another 8 to 10% upside. Within that space, we like Bank of India at current levels, where we think that this stock has a potential to deliver 7 to 8% in a shorter term. In a private sector bank, RBL Bank is one. RBL look quite interesting to us, because this is one stock which post listing has consolidated and now trying to hit a all-time high. So I think this stock has a potential to test 440, 445 on upside, which is another 10 to 15% from current levels. And I think ICICI Bank is one stock which is looking quite positive to me. This stock has seen a very strong recovery from lower levels of 255 to almost 290 zone. Now I think once it see a crossover about 290, we might expect this stock to test 330 kind of levels. So I think these are the stocks within the banking space which looks quite interesting to us.
Sandeep Shenoy as well joins in for a fundamental view on the market. Sandeep, morning. How are you feeling about the markets right now? Two big events are behind us: budget and no rate cut from the Reserve Bank of India. There's been a change in policy stance as well. Markets haven't sort of got disappointing to that extent when they've sold off. They still seem resilient. Big events lined up would be GST, I'm guessing elections domestically, and globally it would be Trump. How would you approach the markets? Would you still look at being a buyer on this market?
Well, I think unfortunately we seem to be slightly disconnected from fundamentals at the current levels, because I think it could largely be attributed towards the sheer flow of capital which is happening, largely internal and some external also. I think till that abates, we are going to see this buoyancy in the markets continuing, and we may be looking stretched on quite a few of the valuation parameters, but market is not going to correct in a hurry. So investors, both short-term as well as long-term investors, have to keep that in mind. We could be having choppiness and maybe some corrective move coming once all the electoral results are out and the new course of our economy is established. But till that time, I think the party is going to continue.
Oh, so I guess no one can fight the inertia of liquidity, and that's pretty much what's happening on the Lal Street so far, at least. Mohit, what are your top trades this morning?
Well, in terms of top trades, I have a buy on KEC. It's looking good on the charts. Seen a nice up move in trade yesterday. This can head higher towards levels of 173 to 175. It's a buy with a stop around levels of 163. I also have a buy on Aptech, trading at all-time highs. Went up on really strong volumes at upper circuit yesterday. It's broken out after 4 months of sideways action. This can head higher towards levels of 245 to 250. It's a buy with a stop around levels of 231. Venky's India also is looking good on the charts and seen a nice up move in trade yesterday. Next levels here are levels of 750. It's a buy with a stop around levels of 705. And yesterday we saw a nice up move in Z Limited as well. So this can continue to head higher towards levels of 535 to 540. It's a buy with a stop around levels of 517.
Just a mention on that Aptech stock, the big up move is coming, and we believe Ashish Kachole has picked up about 6.8 lakh shares in Aptech yesterday at 225 rupees. So watch out for that stock. It could be quite active in today's day of trade as well. A couple of other stocks that will be in focus, and I think Infosys, Sandeep, is on top of the news today. This boardroom saga continues. I guess we all fear that this shouldn't go down the Tata Mistry way, but lots of back and forth. The stock, I guess, has sold off very dramatically, not on back of course, internal concerns, but on the global setup. What would you do with Infi right now?
Well, I wouldn't want to specifically comment on any stock, but one thing, we should all be mindful about when there are too many moving variables. When a company is in transition, you have some external headwinds which are quite against, that is business related headwinds, and you have got some turmoil in the board. I think it doesn't augur well for any stock. We have seen that happening in one of the foremost business houses in India also. But having said that, it could also mean or a spell opportunity for somebody who is trying to scout for extremely, you can say, well tabulated entry levels in these stocks, because many of these companies in this entire arena could be in for a good run 1-2 years down the line, and people may be waiting for appropriate entry levels. I guess optimists should wait for appropriate entry levels, but don't try to fish in troubled waters. It may not be worth the gain.
But what is appropriate trading levels? Ruchit, do you track Infosys? I mean, at 946, I would imagine most valuation experts would say this is a great buy. On the charts, would Infi be a good buy despite the fundamental news flow that's actually been pretty keeping the stock pretty volatile?
Yes, despite of all the fundamental news that is going around now, if we focus definitely on the positional charts, then since December 2014, that is where I'm talking about almost last 2 years. Last 2 years, whenever the stock has corrected, levels around 900 has acted as a very crucial support when from wherein the stock has moved higher almost 3 to 4 times in last 2 years. So I think even this time we have not the stock after this corrective move have not shown any any breakdown of the support of 900. So right now the prices are trading quite close to the lower end of the entire range which has been seen in last couple of years. On the weekly charts, last 2 weeks we have seen formation of the doji candlestick pattern near this crucial support. So I think despite of all the news that is going around, the stock should show a decent bounce back from current levels. Even at current levels, one can look to go long, keeping a stop loss below somewhere below 900, and we are expecting target around 1020 at least in very short term.
Right, that's the view coming in on a couple of the stocks that we talk about. Of course, we'll continue chatting with our guests, but in the meantime, markets are gearing up to open. Just a few more seconds to go before we get opening ticks coming in on D Street. That's the Nifty. Global cues were good. It seems like there is some Friday cheer on the street, at least in opening trade. 88.14 is what we've got, 0.4% higher on the Nifty. The Sensex also trading 0.3% higher. So it's a good looking opening, if that's what I can call it. We've been consolidating for the last few days, now seeing an opening well above levels of 8800, at least in the first few minutes. In terms of your broader market performance, once again, there is inline performance coming in. So the mid cap and the small cap space that have been aggressively outperforming the benchmark in the recent past are not doing too badly either. Both those spaces of the market trading about 0.5% higher. In terms of sectors and stocks, so that's the mid cap, a little bit of underperformance now, so it's pulling back slightly in the small cap, mid cap space. The small cap continuing to look quite hot. In terms of sectors, the day belongs to, I guess, IT, banking, which is up again, 0.5% gains on that one. Auto is trading flat. Metal stocks are not doing too badly, but it is all about banks, and they continue to outperform the benchmark itself. In terms of big movers and shakers, Grasim Industries is topping the list, 4% gains on that stock. A mention on SBI, that's in front of you, 1% higher ahead of its earnings. Expectations are pretty good for what we're expecting from SBI. Sharp earnings could be expected on back of the base effect. Loan growth number will be subdued, but that's keeping the stock at bay. 1% higher on SBI. Bank of Baroda as well ahead of its earnings, up 0.7%. In terms of earnings reaction, Aurobindo Pharma, good set of earnings being posted by Aurobindo. Let's pull up the stock and see what it's getting up to. Reaction is exactly opposite of what was seen on the earnings. 1.5% cut on Aurobindo is what we're getting in. Well, you also had, you have GAIL earnings that you're eyeing, so flat on GAIL is what we've got. Pull up Bosch as well while we're at it. Bosch will announce its numbers later on in the day. The stock is an important mention because you've also had the transport policy that came out yesterday, which was fairly positive. Despite that, the stock is actually trading flat. BPCL, I think we went in with very high expectation. The stock is also up very sharply in the last couple of months. Big outperformer. Earnings were a bit of a disappointment on back of GRMs. The stock is getting a thumbs down, trading 1.5% off in today's trade. M&M, watch out for that one because they will announce the numbers as well. In terms of big movers and shakers, like I said, Grasim has that big move coming in, so that stock trades 4% higher, so huge gain coming in for Grasim. The top gain on the Nifty 50. Tech Mahindra is not too far behind, 3.5% higher is what we're getting in on Tech Mahindra, so it's a good move there. Tata Steel, SBI, Lupin, IndusInd Bank, NTPC, L&T, Kotak, Idea, Bharti, Airtel amongst your top gainers. You've also got Cipla that's having a pretty positive day of trade. Ambuja, HUL, Yes Bank are all trading firm. I'll just quickly pull up the losers before we move on to mid-cap gainers. BPCL, like I said, is down 1.5% on back of earnings. Aurobindo is down 1.5% on back of earnings. Tata Motors, BHEL, Tata Motors, DVR are all trading firm. Bosch, ahead of its earnings, is looking a little nervous too. Well, a check on how your mid-cap stocks are trading. So if we can just pull up the big movers in today's trade. And we'll take you through what's going on across the mid-cap horizon. It's going to be all about stock-specific action. I mean, that's pretty much a given with what we're seeing in the recent past. Aditya Birla up 4%, Voltas, TVS Motors, PC Jewels, Excite Industries is doing quite well. Nearly 209 rupees on the stock, 1% gains for that counter is what we've got. On the sell side, Apollo Tyres, Bank of Baroda before its earnings, MRF and RECF are trading quite weak. Just a mention of the big volume buzzers in today's trade. So you've got quite a few of counters that are seeing huge volume moves. Pull up Aptech to see what's that stock getting up to. Remember, Ashish Kachole has picked up enormous amount of stake yesterday. That counter trading 2.5%. And in fact, this was Mohit's call just before we went into market opening. Apart from that, you've got a pretty sharp rate playing out on Suzlon, good volumes, 1% higher. Triveni Industries is seeing a huge cut, so 7% low on Triveni is what we've got. IOC as well is down about 3% on back of big volumes. Grasim Industries, I mentioned, is up 4%. Tech Mahindra is not doing too badly. Diwan Housing, Aptech, Power Grid are amongst other gainers. So that's the market. It's a good looking picture is what we can say for now at least. Mohit, you want to comment on market opening? What are you making of current trade?
Well, as far as current trade goes, we're still broadly range bound, though we're trading at the higher end of the range at about 8,005. I think 8,020, 8,030 is going to be a reasonably strong resistance area, and I think perhaps during the course of the day we can head back into that range of between 8,020, 30 on the upside and 8,750 to 8,700 on the downside.
Right. Do you want to comment on this one, Ashish? Market opening is looking pretty good, and it's all about stock-specific action. But I think one thing that's worrying me a little bit is mid-cap is now lagging slightly behind. Could this be an indication the rally is now topping up technically?
Not really, because it's more of a consolidation phase which is going on, and once we see a uptick in the volumes, you will see a lot of buying interest in most of these stocks. So my sense is that since Nifty is trading continuously above 8,700 mark, that's a good sign. Until we don't see a clear breakdown below 8,700, I think it's a buy and dip strategy which is going to be seen in the market. Eventually we are heading towards 8950, 9,000 kind of zone. I think within the mid cap basket, there are a lot of stocks which are hitting 52-week high or an all-time high. There we might witness some amount of profit booking, but eventually these are the stocks which are going to see a strong outperformance. Within that space, I think Future Consumer is one stock which is looking extremely positive. We have seen a strong volumes in last couple of trading sessions. I think this stock has a potential to deliver 15% level upside from current levels. We are expecting levels around 34, 35 in a shorter term. On downside, 2650 should be kept as a trading stop loss. In the same basket, V-Mart is one stock which has crossed its monthly resistance zone of 600 levels on in last two trading sessions. I think this is one stock which has a potential to cross 700 mark in coming days. So I think these two stocks are in our radar of buy list. Apart from that, Suzlon, as you mentioned, it has seen a very strong volume pickup and has been consolidating in a range between 16 to 18 for last 2-3 weeks. I think has a potential to test to 24-25 next 2-3 months.
Right. Sandeep, I've got to come to you on Grasim. What's going on with Grasim Industries? Couple of days ago, you had ACC Ambuja running up sharply. I mean, there were reports in the news that indicated a merger could be at hand, but that's been in talks for years now. Today, Grasim is seeing a huge run-up. Is this industry or this space looking very attractive to you, even after the recent rally we've seen?
Well, I think if you want to speak about cement, it's a different ballgame. But and if you want to talk about any corporate happenings in a conglomerate which could have a bearing on its valuation, I think they are two different things. Speaking about cement, yes, I think the tail, whatever you call it, the headwinds or tailwinds are slowly turning out to be auguring well for the sector, and the sector which has undergone very tumultuous phase over the last 12 to 18 months now seems to be coming back, and that's where I think the large players, we are seeing some kind of operational improvement as well as valuation improvement. Otherwise, on the conglomerate front, I think it's going to be too much of a flux, because we just don't know what are the moving parts there, especially with the headlines on merger coming out there.
Mohit, what are you doing with Tech Mahindra, Wipro, HCL Tech? So we've already talked about Infosys, but these guys have been having a good run in the last few days. More upside left, you think, on the likes of a Tech Mahindra? 3.5% gains currently.
Well, yeah, Tech Mahindra is looking good on the charts, and perhaps we can head higher now towards levels of 480, 490 zone. So there could be considerable upside from your stop loss around levels of, sorry, we're already trading at 500. So we can head higher towards maybe levels of 525 next. You can have a stop around levels of 490. As far as Infosys goes, this is kind of trading flat. It's still range bound, so there's no real momentum here. HCL Tech is also again range bound. I'd kind of stick with Tech Mahindra because it's looking the best in the charts amongst all of them.
So it's Tech Mahindra that is having a pretty good day. In fact, it's one of the top gainers, at least in the first few minutes of trade. 2.5% high. It's off the day's highest point, but a firm session nevertheless. A couple of other stocks. I don't know if you guys track Triveni. Ashish, you track Triveni Industries. Big cut on this one. Could one look at going short maybe?
No, it's not in my radar, and I think this is one stock, it's very, very volatile, so we have been, staying away from this stock.
Well, that's an avoid coming on Triveni Engineering. The stock trades about 6% low. I'm not sure what really is going on. Sandeep, what did you make of these pharmaceutical earnings? Most of them are out of the way now. Aurobindo Pharma, good set of numbers. They've missed estimates, but still profits were up 6%. We saw earnings coming from the other majors. All of them seem pretty good. Taro, I know in terms of Sun Pharma, numbers were slightly disappointing. So I guess there could be some concerns on Sun Pharma. But apart from that, Cipla as well did a pretty good run. What are you doing with pharmaceutical stocks? They've been the darling of the street, sold off so badly, not participated in the rally. Could this now be a good time to go out there and buy some of these heavyweight pharma names?
Well, I think there are two set of companies here. One is domestic-oriented, domestic-facing companies, which are going to have a decent amount of runway. I don't think they are going to have a problems. I think most of the valuation damage took place on the upper end. Unfortunately, they happen to be quite a few export-oriented operations, and that's where I think the problems are there, overhangs are there, and I don't think the US overhang is going to lift in a hurry. So large companies are going to be under pressure, especially on the valuation front, and I think their problems on the earning front will be coming to the fore in the next few quarters. So I guess it makes sense for people to move out of the larger players and stick to the second and the third run players, because some of them could be extremely well run operations, especially those which are trying to tap the domestic market, and there I think value for money proposition is also in investors' favor.
Share any trades across the pharma sector? We've seen some sort of rebound coming in a couple of names, at least in yesterday's trade. Today as well, some of these guys aren't doing too badly.
I think if we see this pharma sector as a whole, then there's more of a stock-specific performance over here rather than entire sector moving in a particular direction. Now, if we come on to the stocks, those companies which has outperformed in the recent last couple of months, I think those would continue to do so. Rather, the underperformers would continue to underperform this sector. In this sector, if we go on a stock-specific, then Biocon and Cipla are two stocks which has recently shown a good outperformance vis-a-vis the entire sector. So Biocon, I think, would continue to outperform the entire sector as a whole. And on the other hand, Cipla, if you see, then recently the stock has given a breakout from its falling trendline resistance, which was placed around 585-590 range. Post breakout, the price is rallied up to 620 and again has retraced back to this breakout zone. So Cipla offers a good trading opportunity over here. I think one should look to go long, keeping a stop loss below 568. And on the high side, once the 620 levels are crossed, we can expect targets around 640 or 650 levels. One should have a time horizon of at least 1 month, because these are not the stocks which are in the momentum right now. At least the sector is not in momentum, in a positive momentum right now. So don't go with the stocks which have underperformed recently. Look for stocks which have outperformed and they are on a corrective move right now. So Biocon and Cipla would be two top picks within the pharma space.
With Harrison Malia, it's up about 12% right now. It's a pretty sharp move coming in the stock at 81.5. Is it looking like a good trade today? 10% now.
Well, it's actually at 89 and it's looking okay. I think one can
90, right,
one can go long with a stop around levels of 87, that is today's low, and perhaps you can see levels of even 100 to 105 in the coming few sessions here. So this looks okay for the next couple of days.
Right, that's the call coming in on Harrison Malayalam. The stock at almost 90 rupees is what we've got. Ruchit, very quickly, I'm running out of time, but anything that you've identified in market opening that could be a good trade for today?
A couple of stocks that was in my buy list amongst the recommendations also. One is TVS Motors. Probably amongst these auto stocks, we have seen good outperformance by the company in the recent past. The high top high bottom structure is getting continued, and if we observe the RSI, then after a consolidation phase, RSI has crossed levels of the 60 and is moving higher, which shows a positive momentum. So I think around the levels of in case if we get any minor declines in today's trading session, then one should look to go long in TVS Motor. One can keep a stop loss below 395 and expect target around 440. And second call would be from auto ancillary space, that is Motherson Sumi. Even this stock has seen quite a good consolidation phase. We have seen the entire consolidation of last 5 to 6 months, and the prices are right now giving breakout of that consolidation phase. So on the high side, we are expecting target on 376. One can go long, keeping stop loss below 333. So TVS and Motherson Sumi from auto and auto ancillary space could be looked for buying from very short-term trading perspective.
Right, that's the view coming in. Markets looking okay, holding up and holding up quite well on the Nifty this morning. It's a good start, to say the least, for the Lal Street. 8800 has been respected. Bank Nifty continues to outperform the benchmark. 87.97, so at 8800 now is what we're getting in the first few trades this morning. Thanks, gentlemen, for joining us this morning. We'll take a break on that note. We'll come back. Rajiv Thakkar, CIO and Director at TPFAS Asset Management, joins in.